Hello everyone, good morning and welcome to today's morning report on Wednesday the 18th of February with me, Richard Perry, market analyst at Handtech Markets. The European trading session has got off to a strong start actually, and we've actually seen the FTSE 100 break out. 6905 was the multi-year high on the FTSE 100. 6911 is currently where it stands as I speak, and it's looking strong for the moment anyway. It looks like finally we're seeing some sort of traction to the upside. Whether it holds on to these gains remains to be seen. In fact, that's actually my chart of the day, so we'll see how that one goes there. But we've also got gains on the DAX. Now these gains are coming amid reports that apparently Greece is ready to come to some sort of agreement over its debt negotiations. The suggestion is it's going to be a loan extension. However, it's all in the political wording, all semantics, and it depends on exactly how the terms are agreed. But it certainly looks like we're moving towards some sort of agreement that needs to happen apparently by Friday. Also, we've had news this morning that apparently, news agencies in Russia are reporting that heavy artillery is beginning to be withdrawn from the front line in Ukraine as well, which is interesting. That would also help to boost sentiment. DAX is outperforming FTSE. Well, DAX and CAC are both outperforming FTSE today with that news. So what we're seeing is equities positive. Wall Street last night forming a new all-time high. And what I'll show you here is the you've also got an interesting move actually yesterday on the VIX. Strong bounce on the VIX, despite that we saw the equity markets or Wall Street pushing to all-time highs. So that is an interesting sort of dichotomy, you could argue, on the VIX and the and Wall Street indices. So don't know whether there's something in that, but we'll keep an eye on that just in case. And in the forex markets, we're seeing a bit of consolidation. Really, nothing too significant. Zoom in there on that dollar index. Interesting that this 21-day moving average remains the big support, and it's just beginning to trade below it. Interesting that it hasn't really ever traded clean below it since October. So if it starts to trade underneath it, then maybe that could be signs of a correction, but at the moment it's just hanging on. We'll see how that one goes. But we've got a lot of economic data out today. Main factor being the FOMC minutes tonight, 7 o'clock this evening UK time, and that's going to add more meat to the bones that came in the Fed's statement following on from its meeting. And it was quite a hawkish statement that we got, and we'll obviously want more information as to exactly what the Fed's thinking in terms of its monetary policy moving forward. We've also got this morning, we've got the Bank of England meeting minutes, 9:30. That's expected to stay at 9-0. And I say 9 in terms of all 9 unanimous on the MPC committee, voting for rates to stay flat. Now, if there are a couple of, obviously the risk being that the two previous dissenting voices, Martin Wheel and Ian McCafferty, could well dissent. It's possible, and if that were to happen, that would presumably give sterling a bit of stability once again. And actually, in the last few minutes, we've seen sterling just starting to creep higher, interestingly, in front of those minutes. We've also got the unemployment data for the UK. Now, unemployment data is expected to come in flat at 5.8, but that's not the interesting part of the report. The interesting part of the report will be the average weekly earnings. It's expected to stay flat at 1.8%, and it's interesting because the CPI continues to fall away, 0.3% we had yesterday. So that real wage growth is starting to pull away. That's starting to improve, and continues to pull away from the CPI decline that we're seeing. So real wages getting the benefit of the back of that. Now that is a potentially hawkish sign for the Bank of England there, if that continues. And also into the afternoon, we've got the US housing data. We've got building permits at 1:30. Expected to come out at 1.07, so slightly higher than last month. And also we've got housing starts at 1:30 as well, slightly lower than last month, expected at 1.07. So quite a lot going on today, but the main factor, the main point I want to talk about is the FTSE 100, because the FTSE has now, or is now breaking above 6905, which if I zoom out, 6905 has been this ceiling for so long on FTSE. Every time it gets above towards the 6,900 level, FTSE has fallen away, but now it looks like we're pushing out. We're starting to break out on the FTSE, and that is a really interesting factor. If we can hold on to that break above 6905, then that would be a strong signal on the FTSE. We've had this ranging period for 3 weeks. The FTSE's just been gradually sort of making higher lows and higher highs as it's trying to break out, and it looks like it's now beginning to do that on a successful day. You've got the bullish outside day that we had yesterday, that strong candlestick where we left a low at 6820, and intraday you'll also see that we've got a very small, slightly higher low as well at 6855. So a couple of levels there that you can work with, but it's just looks on this intraday chart the FTSE's trying to break out, really is looking to make a move to the upside. Momentum indicators are not really showing too much positivity. They're still fairly range bound in terms of the RSI and also MACD lines. Stochastics are fairly decent though on the hourly chart, but it certainly looks like FTSE's trying to break out. Now the risk would be, I think, with FTSE is the fact that every time the RSI gets towards the mid-60s, it's fallen away in recent months, and it needs to hold on to this break, and I think continue to push higher. Otherwise, that you might well start to see a bit of profit taking. But certainly at the moment, 69 just over 6905 is positive, and if it can hold on to that break, that is a bullish sign. Certainly closing above the high would be that bullish sign, because that would be that is currently at a multi-year high. But then, well, okay, let's do it. Let's go all the way back to 1999. It takes a while to get there on my chart, but there it is. 1999 is at 6950, which, let me zoom in there, 6950, which was that peak on the 30th of December 1999, just before Y2K, year 2000, and that sharp correction that we saw in the tech stocks. So that's what dragged FTSE to that high, and that is the all-time high on FTSE. So still some work to do to make that, but it certainly looks like initially that we're starting to see a little bit of a breakout, and it needs to hold on to that break. Anyway, I wish you good luck in your trading today on FTSE, and I'll speak to you later. Thank you.